Hi, everyone. Today's topic I want to discuss is related to whether any benefit you receive from Social Security benefit is taxable or not. Social Security benefits and SSI benefits. SSI, which stands for Supplemental Security Income, whether they are taxable or not. This is an important question, and we are going to take a closer look at it in this video. Okay. So a lot of you might be wondering if the benefits you receive from Social Security are taxable or not. Some of you probably think, well, I shouldn't have to pay taxes on it because I've already worked and paid Social Security taxes, right? Let's say you're receiving Social Security retirement benefits and you're thinking, I've worked, my income was taxed already. Maybe it was 6.2% or even 12.4%, depending on whether I worked through a W-2 or filed income as self-employed on a 1099. So since I already paid taxes on that income to Social Security, why would I have to pay taxes again when I start getting those benefits? Makes sense, right? Well, here's what it is. When it comes to the IRS, their rules can be a bit tricky, or even seem a little strange. This is why some of you, after filing and receiving Social Security benefits that you thought wouldn't be taxed because you've already paid into the system, end up surprised. When tax season comes around and you file your taxes, that's when you find out that those benefits you've been receiving might actually be taxable. Even though you've already paid Social Security taxes when you were working, now you're being told you owe taxes on the benefits you're collecting. It's confusing, right? All right, let's get into the details a bit more when it comes to the benefits you receive from Social Security. The first thing I want to talk about is SSI, Supplemental Security Income. Now, this is assistance provided based on need, and it's not taxable, okay? Unlike other benefits you might receive because you worked and paid into the system, SSI is a government assistance program designed to help individuals with low income and limited resources. It's not a benefit you earn through paying taxes. Instead, it's meant to support those who may not have enough income or assets to cover their basic living expenses every month. So because SSI is purely a form of assistance, you don't pay taxes on it. You won't receive a 1099 form to file taxes on this money, and no matter how much you receive in a year, it's not taxable. It's strictly there to help people meet their basic needs, and it's tax-free. All right, let's now talk about Social Security benefits. These benefits are based on the work you've done and the Social Security taxes you've paid, or maybe your spouse has worked and paid into Social Security taxes. Now, when you reach the appropriate age or time to file and collect these benefits, they include the following. 1. Retirement benefits. 2. Survivor's benefits. 3. SSDI, Social Security Disability Insurance benefits. These are the key categories of benefits under Social Security that you can receive. Okay, so whether these benefits you receive are taxable or not depends on your total income for the year and your tax filing status. If you're filing as single, it's based on your individual total income. If you're filing jointly with your spouse, it's based on the combined income of both of you. All right, now let's take a look at this chart. This chart that I've taken directly from Social Security. It helps determine whether the Social Security benefits you receive are taxable or not. Okay, let's focus on this chart, and we'll go into more detail as we go along. So they say that about 40% of people who receive Social Security benefits have to pay taxes, specifically federal taxes. Okay, this is only talking about federal taxes. Now, if the state you live in also has state taxes on Social Security benefits, then you might have to pay those state taxes too. Let me adjust this so it's a bit easier for you to see. All right, so let's talk about whether the Social Security benefits you receive are taxable or not. Here's how you figure it out. You take half of the Social Security benefits you received during the year and add that to any other income you have. This includes things like non-taxable interest or your adjusted gross income. Basically, it's about adding up all the income you've earned. For example, let's say you're getting $1,000 a month in Social Security benefits. That's $12,000 a year, right? But you don't add the full $12,000. Instead, you only take half of it. So that's $6,000. Then you add that $6,000 to the other income you have, whether it's from wages, non-taxable interest, or any other sources. When you total everything up, you get what's called your combined income. That's the number used to determine if your Social Security benefits are taxable or not. Make sense? All right, so once you've figured out your combined income, the next step is to look at your tax filing status. Are you filing as single, jointly with your spouse, or separately? Here's how it works. If you're filing as single and your combined income is between $25,000 and $34,000, up to 50% of your Social Security benefits may be taxable. If your combined income is over $34,000, then up to 85% of your benefits might be subject to federal taxes. Now, if you're filing jointly with your spouse, regardless of whether one or both of you are receiving Social Security benefits, you'll need to combine both incomes for the year. If your combined income is between $32,000 and $44,000, up to 50% of your benefits might be taxable. And if it's over $44,000, then up to 85% of your Social Security benefits could be taxed. And if a married couple files separately, as married filing separately, there's a chance you may have to pay taxes on the Social Security benefits you receive during the year. Let me explain this part a little more. The rules around married filing separately aren't very clear in this case. It's not well defined, so I want to clarify this part a bit more. Let me add a bit more here so you can see this part about married filing separately a little more clearly. Okay, it's something like this. All right, I'll make it like that. All right, when they mention the part about married filing separately, I want to add this. If you're married and filing separately, but living with your spouse at any point during the year, there are no income thresholds or limits, okay? This means that whatever amount of Social Security benefits you receive, it will be taxable. There won't be any thresholds like the ones we talked about earlier, such as $25,000 or $32,000. All right, if you're married and filing separately, but you lived apart from your spouse for the full year, then your income thresholds will be the same as someone filing as single. This means your combined income has to be $25,000 or more before your Social Security benefits become taxable. So, as long as you meet this condition of living apart for the full year, your limits are treated just like those for someone filing as single. Now, I've also added a note here for those of you who might be wondering about other filing statuses, like head of household or qualifying widower. If you fall into one of these categories, the income thresholds are also treated the same as for someone filing as single. The limits will apply just like they do for a single filer. All right, everyone. That's the topic about taxes I wanted to share in this video. For those of you who weren't familiar with this subject, I hope it gives you a bit more insight. I'll see you again in the next videos, okay? If you find this video helpful, please like, share, and subscribe. And for those of you who haven't subscribed yet, make sure to do so to get notified when the next videos come out. Thank you so much, and goodbye.